You know, you think of everything going on in the world and revelations this week and this violence in Las Vegas and concern about North Korea and things heating up there and the tax cut, will it go through, will it not go through? All of those worries, and look at this buying. The sixth straight day, well into record territory. A lot of other market averages going along with the Dow. To Market Watcher Dave Maney on this. Dave, what's happening?
What's happening is still the only place to put your money that you can earn a yield. There's still no place to get the fixed yields in the debt market, and there's nothing that you can find that's spooking people. You've got a pro-business administration that fundamentally makes business people and entrepreneurs like me feel good about the environment. And so from that aspect, and I think there's one last thing, Neil, which is the effects of technology and the internet have been that it has allowed companies like mine to start more easily with less capital, and it has allowed bigger companies to cut lots of expenses out, powering those earnings. So through this phase of the technological revolution, it's kind of all been good news for the markets. Whether that holds or not is a different question.
A lot of people say the tax cuts go through, Dave, this multiple on the market, which isn't obscenely rich, I think maybe a little north of the average, goes way down. In other words, the market is a lot cheaper, a lot more affordable, has a lot more room to grow. Do you concur?
I don't know. I almost think, as we've discussed before, that I think a lot of that's baked in and some expectation of whether it is or not, and a constant kind of handicap.
So you're not in the crowd that says this is not a tax cut inspired rally?
Yeah, I think it could have some bump, some juice to it.
If it doesn't happen,
it'll get a little juiced out, but it's not like there's going to be wailing and gnashing of teeth down on Wall Street tomorrow if that happens.
Yeah. So if there's a delay in the cuts, now the House made a big effort with their budget blueprint. The Senate has to agree on one. A lot of this is arcane stuff, but it sets the stage for tax cuts. So far, so good, right? So
far, so good. Although my reaction when the plan or the framework of a plan came out was this is not, with the exception of the corporate cut, which I realize is a big mover, it's not something that you would feel rippling through the society. So that's a good point. It's math as opposed to emotion and consumer sentiment, because there's nobody's needle that thing's going to move that's on Main Street.
Now, a lot of your investors are very rich, right? They're 1%. It's not all, but do they know that it's unlikely they're going to get a cut?
Yes.
And they're okay with that?
I definitely think so.
Really?
Yeah.
What do they say?
Well, look, I think wealth generators are not so much focused, i.e. entrepreneurs. They're not so much focused on what did I earn on my investment portfolio. They're more focused on what kind of environment I can generate wealth. I run a business. I'm a plumbing contractor. I'm a wealth manager. I'm whatever. I run a business. I can generate my wealth if you give me that runway. You want to shave me a point here, give me a point there. That doesn't even come into my decision-making calculus.
Really?
Yeah.
So if they stay, some of them, at the 39.6% rate, they can't get the 35% party. They might not technically be able to take advantage of the pass-through 25%, if that ever comes. They're going to be okay with that?
In my opinion, the number of people whose needle would move about how many hours I'm going to work or whether I'm going to take this risk on a 4% marginal tax cut, zero.
That's an interesting point. So bottom line, something for them is going to be better than nothing for anyone, right?
Yeah, that's right. They're happy to take it.
Yeah.
But mostly, my belief is you leave me this environment where I know that you're not like the Obama administration coming to hunt me down because I didn't build this. You give me runway and you give me a playing field and leave me alone. Shave me on the back end. That's fine. I'm okay with that. Just don't screw up my runway.
A lot of people have been drawn to smaller stocks lately, Dave. Like the Russell is running to records every day, and the pace has been faster, if that's possible, than the big aggregates. Is that the unsung story for this quarter, maybe into next year, or what do you see?
It could be. I mean, look, what I think is that this information ubiquity that we're living in, it makes it easier and easier for competitors and harder for brands and big traditional things to hold on to what they've got. They had a huge information advantage. They had the ability to spend big amounts of capital to get things done. Now you can do things incrementally. We've turned into kind of an economy of ankle biters, and it's okay unless it's your ankles. So smaller stocks, in my opinion.
So what do you like? What do you like as a group or invest in, or looks keener to you than others?
I fear that if you're a big brand company, if you rely on your brand, and I don't care whether that's Apple or Procter and Gamble or some kind of technology company who's relied on the brand, that to me is what's in danger, because it's harder and harder in a world of transparency and reviews. It's harder to say, trust me, my product's better because I have the magic brand.
Real quickly, would you buy a market aggregate at these levels, as someone said, a Dow ETF or an S&P or a NASDAQ?
I would not be thrilled about it.
Really? So there's not a lot of run to room here.
Or a lot of room to run.
That too. There's a reason why he doesn't wear a tie. He doesn't have to. He's that smart.